Welcome back. With mortgage rates once again increasing and home prices up from last year, what will happen to the U.S. housing market in 2024? In today's video, I'll share the details, including the top 5 U.S. markets in which Corelogic believes home prices will decrease the most over the next 12 months. I'm actually really excited to share this report for you guys. And by the way, if you guys are new here, I invite you to subscribe to this channel right now because I post frequent housing market updates so you guys can be more informed about whether to buy or sell a house right now. With that said, I have so much to share in today's video, and let's begin. Here's this new report from Corelogic just announced today, which is on April 2nd. Let's first talk about very briefly what happened this February compared to the previous month and also compared to 1 year ago. It says home prices nationwide increased year over year by 5.5% this February compared to February 2023. On a month-over-month basis, this is the gain in prices or the change in prices from January through February this year, an increase of 0.7%. By the way, they mentioned here later in the video or later in the report here that this is more than double or nearly double the change we should expect from January to February each and every year, looking at pre-COVID levels. So home prices increasing much more compared to pre-COVID levels. Now, before I share their forecast over the next 12 months, let's have a look at what they reported 1 year ago. I found this posted on April 4th, 2023. It says here that their forecast from February 23 through February 2024 is an increase of 3.7%. By the way, this is not based on home sold prices. This is based on Corelogic's HPI or their home price index. So on national level, 1 year ago, they forecasted that prices would increase by 3.7%. And look at this report again, because home prices increased by 5.5% compared to the forecast at 3.7%. So it came fairly close to their predictions 12 months ago. Okay, speaking of their forecasts, here's what they had to say. Their forecast over the next 12 months, this is through February 2025, is a gain in prices up by 3.1%. This, of course, is a lot less compared to the previous 12 months at a gain of 5.5%, but 3.1%, if we actually get to that number, that'd be more or less in line with long-term averages. Over decades, the average increase or home price appreciation is in range of 3 to about 5%. So right in line with long-term averages. According to Corelogic's chief economist, she stated the following: U.S. annual home price growth remained mostly consistent with numbers seen last fall in February, but finally slowed as a residual impact of comparing gains from the weak 2022 home prices wore off. Corelogic projects that year-over-year home price gains will continue to rise at a slower pace for the rest of 2024. This is the challenge when reporting year-over-year changes, because if home prices tanked like they did in the second half of 2022, when comparing year-over-year prices in the second half of 2023, it appears that home prices are more robust. But let me just kind of share an example with you guys here. Here is right here. You look at home prices this year, which, in 2023 compared to 2022. So of course, as you guys all know, if you follow the channel, if you guys watch the news, home prices tanked in the second half of 2022, right? So when comparing the year-over-year changes in the second half of 2023, they appear a little bit more robust because home prices did not decrease as much as they did in 2022. So for example, back in, let's just look at more or less July 23, prices increased by 3%. Then they were more or less at 3 to around 4% for the remainder of the year, even though we did see a seasonal decrease in prices like we do each and every year. So when comparing it year-over-year changes, it really has an impact regarding what happened in the previous year. In contrast, look what happened in 2022. To start the year, prices absolutely skyrocketed, whereas last year, home prices did increase, but did not increase at the same rate last year. That's why home prices were down by around 3 to about 2% last year. I should say that's why they were down on a year-over-year basis during the first half last year. So I hope that makes sense. I think Corelogic was spot on regarding this because the changes on a year-over-year basis don't really tell us the full story. All right, let's get back to Corelogic's report here. It says an increase of for sale inventory. In other words, the amount of houses for sale increasing compared to last year is also benefiting potential home buyers. So here's an update for you guys regarding that. Here's altosresearch.com. They update their numbers every Monday. And of course, I report their numbers to you guys each and every week. In any case, what I found to be really interesting is that there's around 517,000 homes for sale right now. I believe this is only existing houses, excluding brand new home construction. And that's because there's around 460,000 brand new single family houses for sale. That's dirt lots, houses under construction, and also completed houses as well. Overall, on a national level, around 460,000. Compare that to 517,000 in the resale market. In any case, at 517,000, 1 year ago, we were only at around 414,000. So we have approximately 100,000 more houses for sale right now compared to 12 months ago. On top of that, at least for the 7 weeks ended March 29th, this is at least a 3-year high during the same time frame. Higher than last year, much higher compared to the lows we had in 2022, when at that time we had 252,000 houses for sale, but also higher compared to 2021 as well. But at 517,000, this is still way below 2020 as well as 2019. In any case, getting back to this report, it's a positive sign if we're not going to see runaway home price growth. On top of that, it's also good to see that we have more houses for sale, up by about 25% on a year-over-year basis. All good news for home buyers. However, though, housing affordability at very low levels. Redfin reported about a week and a half ago that housing affordability at all-time record lows due to elevated rates and also increasing of home prices as well. And Corelogic also touches on that as well. It says housing affordability remains a concern, particularly if rates remain elevated throughout the spring home buying season. Rates have been around 7% for quite some time, which is really hampering home sales so far this year, even though we have approximately 25% more houses for sale. Their chief economist also stated the following: with a 0.7% increase from January through February this year, this is almost double the monthly increase recorded before the pandemic. So before the pandemic, it would be more normal to see home prices increase by about 0.4%, for example, somewhere around there. And now this month compared to January, or I should say this February compared to January, it rose by 0.7%. It says spring home price gains are already off to a good start despite continued mortgage rate volatility. That said, more inventory finally coming onto the market will likely translate to more options for buyers and fewer bidding wars, which typically keeps outsized price growth in check. They're 100% spot on regarding this, because when we see more inventory hit the market, a gain of around 25%, this means, of course, there's more options for home buyers. And because there's more houses for sale, then that should lead to fewer bidding wars, especially given the fact that rates have not decreased very much at all, still around 7% at the time of filming this video. So because of all these factors, this should limit huge increases in prices this year, unless something drastic happens, such as rates decreasing big time. But in any case, I'll definitely keep you posted with the latest developments. Corelogic also shared how each of the 50 states fared, because there's some very big differences here. So overall, at a national level, prices increased by 5.5% year over year. There's only one state that posted a decrease in prices over the past 12 months. That was actually Idaho. So 49 are up on a year-over-year basis. In fact, the states with the highest increases year over year were South Dakota, up by nearly 14%. Then we have New Jersey and Rhode Island. And by the way, I actually was a little bit confused regarding this map right here. So I emailed Corelogic. They actually just got back to me. I just looked. So Louisiana here saw a small gain, an increase of 0.9%, whereas Idaho saw a decrease on a year-over-year basis. This is less than a 1% gain, which means Louisiana squeaked out a small gain, whereas Idaho decreased from 12 months ago. When looking at the top 10 US states, again, leading the nation was actually South Dakota. Then we have, again, New Jersey, Rhode Island, Maine, Connecticut, New Hampshire, Wisconsin, Illinois, Ohio, and Michigan. Basically the Midwest and also the Northeast experiencing the biggest increases in prices. In contrast, just for comparison's sake, here's what the map looked like in February 2023 compared to February 2022. The Western states all posted a gain of less than 2%. And on top of that, California, Idaho, Montana, Nevada, Oregon, Utah, Washington, and as well as Washington, D.C. posted a decrease in prices from 12 months ago. Much different compared to this year's map, where the only state that posted a decrease was actually Idaho. Let's have a look at the top 10 US states that posted the biggest increases from February 2022 through February last year. Florida led the nation. Then we have Maine, South Carolina, Vermont, Indiana, Arkansas, South Dakota, North Carolina, Georgia, and New Jersey. So some of the biggest increases from a year ago were actually located in the South as well as the Northeast. Something I found to be really interesting as well is that Florida led the nation 1 year ago. However, looking at the states this year, Florida did not even make the top 10. Let's also have a look at the top 10 US metros to see how they fared 1 year ago. So this is a report from February 2023 here. So Miami, Florida, giant increase of 15.6%, whereas the Western metros were either flat or down slightly. In fact, Las Vegas down by 1%. Here's what the map looks like right now though. Las Vegas now increasing by 7.1%. San Diego up by 10%. A year ago, it was flat. Pretty wild. Also, Houston, Texas only up by 2.7%, whereas a year ago up by 6%. What's really just kind of caught my attention really is that the giant surge in prices in Miami, Florida. So even though 1 year ago, prices increased by 15.6%, they increased once again up by 10.2%. Pretty wild here. In any case, very big changes though from 1 year ago. All right, let's have a look at the top 5 US markets in which Corelogic believes home prices will decrease the most over the next 12 months. Leading the nation, Palm Bay, Melbourne, Florida, a very high probability. Then we have Atlanta, Georgia, Dayton Beach, Florida, Spokane, Washington, and Northport, Sarasota, Florida. With that said, please comment below your biggest takeaways from today's video. Also, if you guys want a real estate agent referral, check out my link below, which is realestateteamfinder.com. I'm also just started a consulting business as well. I provide a link in the video description below there as well. If you guys want some advice regarding your housing market or starting a YouTube channel as well, excuse me. Thank you so much for watching today's video. I appreciate you, and we'll see you in the next video.